I think it can very much be seen to be oversimplified, and that that it is very much the software spits out the VAT return that must be correct, and that's absolutely not the case.
Hi everyone, welcome back to our YouTube channel once again. We are talking about VAT again. We did a video recently designed to help growing businesses who are passing the VAT threshold sort of make the right decisions in planning and making sure they get everything right in order to prevent issues later on. So what we're doing today is part 2 of that video, and we're delving into VAT a little bit more and talking specifically about one of the big decisions that companies that are approaching or have passed the VAT threshold need to make, which is VAT schemes. So I'm joined by Chris Martin, who is one of our team leaders, chartered accountant, FCCA.
Yes,
is that right?
That's right. Yeah.
VAT specialist, helps owner-managed businesses of multiple industries and sizes basically get all this stuff right. So to start with, Chris, what actually are the VAT schemes?
So there's probably 4 main VAT schemes in the UK. There's the accrual scheme, which is probably what 90-95% of businesses overall will use. There's a cash accounting scheme, there is a flat rate scheme, and there's also an annual accounting scheme, which in fairness is not all that popular in practice. It does get used periodically, but we just don't tend to see a lot of it.
And it tends to be the VAT registered companies will always adopt one of these schemes. Is that
effectively, right? Yeah. And because in choosing a scheme, there's certain turnover thresholds, it's not uncommon for a business to start on a particular scheme, let's say it's flat rate or cash accounting, and when they exceed a certain threshold, they'll then go on to the standard model. Right. So it is expected that there is a bit of a shift.
So it's not, so I guess lesson number 1 from this is it's not something that you set and forget.
No, it's not. It's certainly not a set and forget. No.
Okay.
Potentially, based on the turnover that you are, if you stay under those thresholds, hypothetically, you could have a scenario where you do set and forget. But in a growing and scaling business, then the likelihood is not.
And even if you expect to, it's always worth reviewing it.
Yeah,
regularly.
It is. Yeah, it is reviewing. I think the key point to make there is, with the VAT schemes, you are allowed to change, but you're not seen to be changing all the time to benefit you. So it's not a quarter to quarter thing. It's more of looking at this over a period of years, really.
Okay. So just to work through these then, kind of in layman's terms. To start with, what is the accrual scheme?
Yeah, sure. So the accrual scheme is the default scheme in the UK. That can apply to a business of any size. There isn't turnover thresholds linked to the accrual scheme. The accrual scheme effectively, you submit either quarterly, which is the norm, or monthly returns. And the key thing with the accrual scheme is the transactions get inputted onto your VAT return based on the dates of your invoices, which differs from the cash scheme, which we'll talk about in a little bit. So ultimately, with that scheme, the benefits of it are usually if you're in a business where your invoice and ultimately the cash flow is very close by. Let's say you're an e-commerce business and you sell items, and effectively somebody makes an order, there's an invoice there, and there's a payment very closely after. Whether you were on an accrual or an invoice or a cash scheme, because effectively the invoice and the cash is so close together, it wouldn't, from a sales VAT point of view, it wouldn't make a big difference in terms of which scheme you're on. But by being on the normal accounting scheme, if you pay your suppliers a little bit later, you can still claim that VAT a little bit earlier because it's on an invoice basis. So that's really the main thing with the accrual scheme is it's the default scheme. It has benefits where a business receives its cash for its sales very close to its invoice, and ultimately it doesn't have a turnover threshold attached to it.
Okay, and when you say default scheme, does that mean when you register for VAT, you are automatically assigned to it, or do you actively select?
You actively select it, yes. Yeah. Okay. You get when you perform it, when you do the VAT registration, you get asked which scheme you want to apply for. Okay. And on that same registration, you get asked for an expectation of your turnover as well. So that will almost start to weed out if you wouldn't be able to use it.
So lesson number 1 in why it's important to have visibility over your numbers at all times.
Yeah, absolutely. Yeah, this all links together. The VAT registration consideration in the first place, and then ultimately the schemes is not one that you just want to skip over and just do. It is a thought out process, or should be a thought out process. The key thing with the schemes generally, it's worthwhile just mentioning this here, is the different VAT schemes aren't there to make you pay any less or more tax. They're more about the admin burden, and not so much the cash flow side of it, but ease and able to sort of cohere to the schemes, as opposed to a particular scheme making you way better off or worse off. That's not the case.
So you mentioned the cash accounting scheme. What's that one then?
Yep, so cash accounting works fairly similar, not the same, but fairly similar to the accrual scheme, in a sense that you still submit either quarterly or monthly VAT returns. The big difference between the accrual scheme and the cash scheme is that the cash scheme, the transactions get entered onto your VAT return and reported to HMRC as and when the transactions are paid. So, for example, in a situation where you raise an invoice in, say, January, and you don't get paid for that invoice until, say, it was March, you would report that transaction in whichever VAT period March fell under for you, whether that would be a March VAT return, an April VAT return, a May VAT return, a June VAT return, etc. So the benefits really to the cash scheme is if you're a service business, or you're a business whereby there's quite a lengthy delay between you sending a sales invoice out and being physically paid for it, it allows you to benefit from effectively not having the cash flow impact of having to pay out the VAT for something that you've not received in yet. So the cash scheme, ultimately, because it lets you report as and when you receive the cash, you're ensuring that you've got the cash there in order to pay the VAT bill. So it kind of helps with that cash flow side of it. It's not a trade-off as such, but one thing to note with the cash scheme is you can only join the cash scheme if your turnover is under 1.35 million. If you're on the scheme already, there's then a slightly further on threshold that comes around where you then have to leave the scheme.
Okay.
So it's not quite, if you're on the scheme and you've only just exceeded 1.35, you don't automatically get booted off it. But if you go further beyond that, there is a point where you do have to come off it, and then you would just normally go onto the default accrual scheme.
Okay. So in terms of the ideal situation where you'd opt for the cash scheme, it is those businesses where there could be a lengthy delay between invoice going out and cash.
Absolutely, yeah. And a smaller business that is a little bit more sort of cash flow sensitive as well. Okay. So it helps. The trade-off naturally then is on the whole, it's still a positive, being able to delay that cash outflow. But the key point there from the expenses side is you then only get to claim the VAT back as and when you pay for an item as well. On the whole and on the round, it still tends to be more beneficial. But it's a point to remember as well. The cash scheme doesn't just mean you only pay the VAT over on your sales when you get paid for those sales. It also works the same way for your expenses as well.
I see. And so the next one is the flat rate scheme.
Yeah.
So what's that all about? Presumably there is a flat rate involved.
There is, absolutely, yeah. So the flat rate's probably, it's not uncommon, but it doesn't get used quite as often as the main two schemes, or I would say the most common two schemes, i.e. accrual and cash. The flat rate scheme effectively tends to be, it's not absolutely for everyone, it tends to be the really small businesses that effectively want to reduce their admin burden. Because what the flat rate does is you'll get assigned a flat rate based on the industry that you're in, between 4 and 16.5%, and effectively you still charge a VAT on your invoices, but then that total that income that you've got, effectively then you pay the agreed percentage of that. So for example, it might be £100,000 worth of sales, you might be on 10% hypothetically, and you pay the £10,000 over effectively. What that does mean, though, because you're paying a reduced percentage, you're paying lower than 20%, you don't claim VAT back on your expenses. So from like a bookkeeping point of view, that's actually a lot easier, because you don't have to worry about, well, what, am I doing my own bookkeeping, and what VAT codes am I sort of analysing all my transactions in? Your expenses just get logged on purely as just no VAT, or there's no VAT applicable to them. And that means generally you sort of the admin burden around the bookkeeping significantly reduced. The flat rate scheme does have a turnover threshold again on it, a lot lower, significantly lower than the cash scheme. To enter the flat rate scheme, your annual turnover, your net turnover, so the turnover before you add VAT on top, has to be under 150.
Okay.
Okay. The percentage that's allocated to that particular industry is a percentage that's been arrived at based on what seems fair.
I see.
And when I've done calculations before for certain clients that I work with that are on the flat rate scheme currently, when you weigh up what their current position with the flat rate scheme versus what it could have been with any of the other two of the main schemes, the numbers are usually very much comparable.
Right, that makes sense.
It might only be somewhat different if there's a business that has tons and tons of capital expenditure as well, albeit you probably wouldn't expect that on a business that's the turnover is relatively low anyway. So it's not so much about the saving itself, because that percentage is a blended percentage effectively, as meant to be. But it's more about simplifying the admin burden of administering VAT.
Yeah. Okay. And the final one that we'll mention in more detail is the annual.
The annual
scheme.
one.
So what's that one all about?
So the annual scheme, again, it's the key point there is it's a reduction in admin burden again. So you still do a VAT return, albeit that's an annual VAT return, obviously, as the name suggests, as opposed to a quarterly VAT return or a monthly VAT return. The key difference is, obviously, you're submitting once a year, but you are making instalments throughout that year. Usually 9 instalments is the norm. So doesn't have a particular massive impact on in terms of, do we pay more or less VAT? It's more the admin burden around it. As I said earlier, none of these schemes are ultimately there to save you massive amount of VAT or to cost you any more in VAT. It's really about the admin burden and finding the scheme that suits your needs best.
Okay. So speaking of suiting your needs best, then, if your company's about to cross the VAT threshold and you're thinking about this, how do you figure out which scheme you should be considering first?
That's a great shout. I think the first thing, just generally speaking across the board, is the turnover. But as you mentioned, we're aiming this towards businesses that are there or thereabouts at the threshold, or maybe only just beyond it. So we're assuming there that all of these VAT schemes are in play.
Yeah.
So I'd almost have a bit of a step-by-step approach. Firstly, personally, I would think about the sector that I'm in. If I'm a services business, effectively a one-man band, I might strongly consider flat rate scheme, because again, the admin burden around the VAT returns will be significantly reduced. If I deal in goods, and I think whether it either be goods or services doesn't really matter so much, but more so the point of the business has got legs to scale in there. I'm then looking at my customer base initially, and I'm thinking, well, will there be? Am I expecting long delays between when I do my work and when I get paid for my work effectively? And if that's the case, that would push me potentially down the cash scheme route. If I invoice and I know I'm getting paid relatively quickly, then ultimately I'm jumping. I'm thinking accrual scheme might make sense straight away there, because the sales VAT, whether I was on an accrual or a cash scheme in that scenario, would be very little different. I would just be, if I went onto the accrual scheme, it just meant I could reclaim the VAT on my expenses that little bit sooner, again benefiting cash flow. A third thing I would look at, and this won't be all that common, I would also look at the types of services and types of goods and services that I'm selling as well, in terms of not so much the scheme but more the frequency now. Okay. Because if I, let's say I was a grocer, or I was building new build residential, where ultimately when I either sell some of those groceries or I sell the new build residential, it will be a zero rated tax supply. From a sales point of view, I know that sort of as I go through that sort of that process of business or the work that I'm doing, I know that I'm going to incur costs on the way. And if I choose to submit VAT returns a little bit more regularly, i.e. monthly, that can again aid with the cash flow. Okay. Because if my VAT returns are looking like they're going to be reclaims every time, I might as well have that money on a monthly basis drip fed in, as opposed to a big lump sum land every quarter. Right. So that's certainly a consideration. But just to sort of summarise all of that, the first thing is considering the turnover. Secondly is considering the market that I'm in and my customers and how quick do my customers pay. And then also at the same time looking at the work that I do, is that work effectively VATable? In the scenarios I mentioned where we were turning over 0 rated supplies, as I say, monthly VAT returns is a good action point.
So even if you're planning on, say, keeping it really simple and doing it yourself, is it a good idea to seek even like one-off advice just to make sure you're on the right track?
Yeah, I do think that. Yeah, and funnily enough, I've had a client with this particular consideration literally this week. So it does make absolute sense, particularly in the first VAT return that you do, because there are rules around what you can and can't claim pre-trading expenditure-wise for various different goods and services. It makes absolute sense to seek advice, at least for the first VAT return, and then potentially maybe a little bit of hand-holding or some sort of review before you submit going forward. Yeah. I think it can very much be seen to be oversimplified. Okay. And that that it is very much the software spits out the VAT return that must be correct, and that's absolutely not the case. Just for example, just because there's VAT on an invoice doesn't mean that it's recoverable by the business. The easiest example there is when a business leases company cars for people. If the car has private use in it, even though the invoice will say, let's say it's £500 plus VAT, plus £100 of VAT, 50% of that £100 of VAT is blocked straight away. So you have to then you're making adjustments in your VAT return to account for stuff like that. So it's an oversimplified tax.
Well, there you go. I think we could probably leave it there. Thank you very much, Chris.
Okay, no problem.
As you can tell, Chris knows a thing or two about VAT, as do the other client FDs and accountants at Gravitate. If any of the anything we've talked about in this video rings a bell or sounds like an important decision you need to make, send us an email, hello@gravitate.digital. You can also find out more information on our website, which the link will be below. And if you want more videos like this, whether it's on VAT or other areas of accounting, you can also subscribe below. But other than that, thank you very much for watching, and we'll see you next time.
Thank you.